Did you know that the top 1% of the wealthiest people in the world own more wealth than the bottom 50% combined? But here's the billion-dollar question. How much tax do you think they pay? It's no secret that the world's wealthiest individuals and corporations often pay less tax than you'd expect. This isn't just a coincidence or a quirk of the system. It's a calculated strategy known as tax avoidance. These billionaires employ a range of strategies to minimize their tax liabilities, creating a controversial and ethically charged landscape. Some argue that it's smart business, while others see it as an unfair advantage that deepens the divide between the haves and the have-nots. Welcome to Luxe IQ, where we unravel the mysteries of the wealthy and powerful. Today we're diving deep into the world of tax avoidance, unearthing the strategies that help the super rich keep their wealth. Well, super. Imagine a paradise. Blue seas, white sands, and a zero tax rate. Welcome to the world of offshore tax havens. Now let's dive right into the heart of the matter. Offshore tax havens. Picture this, a billionaire decides to set up a company, but not on his home turf. Instead, he chooses a small, often tropical country with low to no tax rates. These countries, also known as tax havens, offer the wealthy a unique proposition. Park your wealth here and enjoy the benefits of minimal tax liabilities. But how does this work? Well, it's all about the art of domicile. You see, many tax laws are based on where a company is domiciled or officially located. By setting up a shell company in a tax haven, billionaires can claim that's where their business is based and therefore that's where their income is generated. This allows them to take advantage of the lower tax rates in these countries, reducing their overall tax bill. Now, you might be wondering, isn't this illegal? The answer is no, not technically. These strategies exist in a gray area of international tax law. They're controversial, yes, and their ethical implications are certainly up for debate. But as of right now, they're perfectly legal. And the implications, well, they're enormous. For the billionaires, it's a financial paradise, an opportunity to significantly increase their wealth. For the tax havens, it's a steady flow of foreign investment, which can boost their local economy. But for the countries losing out on tax revenue, it's a different story. These strategies contribute to the growing wealth inequality we see today, with the rich getting richer while public services suffer from lack of funding. So in a nutshell, that's how billionaires use offshore tax havens. They turn paradise islands into their personal piggy banks, keeping their wealth safe from high tax rates and growing their fortunes in the process. So that's how billionaires turn paradise islands into their personal piggy banks. Not all companies are what they seem. Some are just empty shells existing only on paper. Meet the shell companies. Let's dive into the world of shell companies. Imagine a company that doesn't produce any goods, doesn't have any employees, and doesn't even have a real office. Sounds strange, right? But that's exactly what a shell company is. It's a business entity that exists only on paper, with no physical presence, no real operations, and no employees. You might be wondering, why would anyone want such a company? Well, the answer lies in the realm of tax avoidance. Shell companies are often used as a tool to circumvent tax laws and to keep financial affairs away from prying eyes. They're like secret vaults, holding assets and money away from the taxman's reach. They are set up in tax havens, places with extremely low or non-existent tax rates. The owners of these companies can funnel their money into these entities, effectively hiding their wealth and reducing their tax liabilities. However, it's important to note that while shell companies are legal, they are often associated with illicit activities due to their secretive nature. They can be used to launder money, evade taxes, and hide assets, raising ethical and legal questions. So, when you see a company that seems to do nothing, remember, it might be doing a lot more than you think. Empty on the inside, but heavy on the wallet. That's the power of shell companies. Trust is a powerful thing, especially when it comes to tax benefits. Let's talk about trusts and foundations. Now, what exactly are these trusts and foundations that billionaires love so much? Well, in the simplest terms, a trust is a legal arrangement where one person, known as the trustee, holds and manages assets for the benefit of another person or group, known as the beneficiaries. Foundations, on the other hand, are typically not-for-profit entities set up for a specific purpose, such as charitable, educational, or research activities. But here's where it gets interesting. By placing their assets into trusts or foundations, billionaires can effectively separate themselves from their wealth. This not only provides them with a level of anonymity, but also allows them to avoid or significantly reduce their tax liabilities. You see, because the assets are no longer in their name, they're no longer subject to the same levels of taxation. And it's not just about income tax. Trusts and foundations can also help to avoid estate and inheritance taxes, providing a neat little loophole for preserving family wealth across generations. But it's not all sunshine and roses. These strategies come with their own set of rules and regulations, and if not managed correctly, can result in hefty penalties. Not to mention the ethical questions they raise about wealth inequality and tax fairness. However, despite the controversy, it's clear that trusts and foundations play a crucial role in the financial strategies of the world's wealthiest individuals. They offer a level of security and flexibility that's hard to beat, making them a popular choice for those looking to protect their assets and minimize their tax liabilities. But remember, while these strategies may be legal, they're often complex and require expert advice. So if you're thinking about setting up a trust or foundation, it's always best to consult with a professional. So there you have it. Trusts and foundations, the billionaire's best friend and the taxman's worst enemy. They may be a boon for the wealthy, but they're certainly a headache for those trying to ensure everyone pays their fair share. As always, here at Luxe IQ, we're committed to shedding light on these complex issues and sparking informed discussions. So stay tuned for more insights into the world of wealth and finance. Charity, they say, begins at home. But for billionaires, it begins with tax deductions. When we think of charity, most of us imagine the act of giving to help those less fortunate. But for many billionaires, charity is less about altruism and more about strategic tax planning. One of the most popular methods billionaires use to reduce their tax liabilities is through charitable contributions. Here's how it works. Let's say a billionaire donates a portion of their wealth to a charitable organization. This donation is then deducted from their taxable income, effectively lowering their overall tax bill. Now you might be thinking, doesn't this mean they're giving away money? Well, yes and no. While the money does indeed go to charity, the amount they save in taxes can be substantial. In some cases, the tax savings can even exceed the value of the donation itself. It's like getting a discount on your taxes for being generous. Moreover, these charitable contributions often go to foundations or trusts that are controlled by the billionaires themselves or their families. This means they can still maintain influence over how the money is used, even though it's technically no longer in their possession. In essence, charitable donations allow billionaires to do good while also doing well for themselves. It's a win-win situation, for the billionaires at least. Giving never felt so good, especially when it comes with tax benefits. Tax avoidance, a controversial but widespread practice among the world's billionaires. It's a complex puzzle we've been piecing together throughout this exploration. So what have we learned? First, we delved into the art of offshore tax havens. These are the scenic islands and picturesque locales that double as a tax paradise for our billionaire friends, helping them retain more of their wealth. Next, we've shone a light on the shadowy world of shell companies. These are entities that exist only on paper, yet play a significant role in helping billionaires reduce their tax liabilities. Then we looked at trusts and foundations, the billionaire's best friend. A clever way to protect wealth, often under the guise of charity while enjoying lucrative tax benefits. Speaking of charity, we also explored how charitable contributions can be a strategic move for billionaires. By donating a portion of their wealth, they can enjoy substantial tax deductions, all while polishing their public image. And finally, we discussed tax credits and incentives, the government's own way of encouraging investment and innovation, but often exploited by the rich to further reduce their tax bill. Throughout this journey, we've seen that these methods, while legal, raise significant ethical questions. Is it right for the ultra-wealthy to use complex strategies to minimize their tax liabilities, while the average citizen pays their fair share? This is a question that remains hotly debated across the globe. Remember, not everything that glitters is gold. Sometimes it's just well-avoided tax. This is Luxe IQ, signing off. Don't forget to like, share, and subscribe. We love delving into the complex world of wealth and finance, and we're thrilled to have you along for the ride. Stay smart, stay curious, and stay tuned for more intriguing insights in our next video.